So welcome back to another episode of Multifamily AP 360, and today's our guest is Deepak Kaushik from Westio Capital. Welcome, Deepak.
Hey, thank you, Rama. I'm really excited to be here and to talk about the real estate, multifamily investing, and vacation rental investing with you.
Awesome. And little bit about Deepak. Deepak Kaushik is an experienced real estate professional with a focus on managing multifamily apartments and also STRs. He currently oversees 500 plus units across South Carolina, Georgia, and Florida. Deepak excels in property acquisition using a data-driven approach to underwriting and is skilled in operations management with an emphasis on controlling expenses, capital expenditures, and human resources. So with that, Deepak, you want to add anything to your background?
I think a bit about myself. I came to US back in 99 to do a master's in engineering, and I also did MBA from Duke, as you can see. Was part of a startup right in the college when back in 2001 and 2, I was a minority owner in a startup company, which was started in a two-bedroom house and end up growing the company with the owners to 100 plus people and selling it to Tickets Now, Ticketmaster Group. The company was focused on buying and selling tickets online, so a lot of focus on technology, online marketing, and product management. And then I worked in Amazon in Seattle for 5 years, and then came back to East Coast because my family's here, and worked at Capital One as well for 8 years. And obviously now working full time in real estate, focused on vacation rental and multifamily apartment housing.
Awesome. So thank you very much for saying that you have technology background and other experiences, right? So what kind of skills you transition working into Fortune 500 companies like Amazon and Capital One to managing multifamily apartments? So what lessons did you bring from those experiences?
Absolutely. Before Amazon, like as I mentioned, I was part of a startup, and in startup you do everything. And it's a great journey to take it something from a small thing and then build it up where you have growth and also the contribution across industry you're making. But when I went to Amazon, one thing I was very much surprised is the scale they have and the impact they can have with the scale if you do things right. I think one is that scalability and how do you use technology and process to make sure you are delivering on the goal that you have was one thing that stayed with me. Another thing, like few key things that I really stayed with me until now, like on Amazon, there are a lot of Amazon's key principles that they follow, and even in Capital One. And Amazon, one of the key principles they have is frugality means, hey, you make sure that you are not spending money and you staying with your means. Like I remember we used to have our desks made of doors at Amazon. They like didn't used to spend anything at the time. And I think that's one piece which has stayed with me because in this business, expenses, you got to stay on top of it. They can easily spiral out. And keeping an eye on, hey, I want to save every dollar I can because whatever I save, I give it back to our investors and we run efficiently. So I think one is that mindset. Scalable process is another one, from like structure acquisitions, investor relationship, and operations. How do you make sure that you are able to manage all the acquisition? Like last year, I probably was involved about 100 plus underwritings, and then talking to all the investors. And it cannot be willy-nilly doing one at a time. There has to be a right process where you're reaching out with them, sharing the progress, right? Have a database of investors, reaching out to them on an ongoing basis, telling them what's going on in your business or what you're looking for. So keep them educated as well. And on the operations side, multifamily apartment and vacation rental, one of the things is it's not like a rocket science, but there are a lot of things that you have to do at any given time. If you take multifamily journey, acquisition, right? Underwriting is a big thing. Understanding the city where you're going and the area you're buying property, that macro micro analysis is important. Underwriting in itself can be very time consuming. And then acquisition process overall, lending, investors, all those things take like thought process around how to do it in the right way because you can easily get overwhelmed with this. And then on the operation side, it is every day, one thing or another. Start from marketing and prospecting, then your expenses, then your collections. All these steps require a lot of thought process. And then how do you do across multiple properties? You cannot do one at a time. So you got to build processes that cuts across horizontally all your properties where you can get a view what's going on these functional areas so that it helps you make decision. So that's one piece. Then technology and data was another thing which I think has immensely helped me coming from this Fortune 500 companies. Like how do you build things scalable using technology that reduce time? In the end, technology helps you gain more time. I don't want to spend time creating pivot tables on Excel file for every report. I want to create a dashboard. I want to create a database. I want to use cloud system. I want to incorporate AI that helps me give answer. Like ChatGPT is a very simple example, or generative AI, where you can create content that you can share quickly versus going to content writers in the past, right? You still need them. I'm not saying no, but I'm saying like there are things you can expedite. Like in Capital One, I was part of building their financial chatbot where we used machine learning and AI. So as a product manager working with the tech and data analysts and everybody to build this chatbot that can respond to people. Like that gave me experience of what does it mean to use AI? How can you use AI to make things that can efficiently get things done? But it's not about making things. How can keep improving the product as well so that you're improving the customer experience? So all those things, I think technology and data has helped us in this business since there are so many functional areas and each of the functional areas have data element in it. And the other thing is like cost control. Again, coming from these big Fortune 500 companies, you have budget every year, right? You get a budget and your project, and you got to make sure stay within budget and you finish your project. Getting project done is important, but there's always less budget and more things to do. So how do you manage that, right? Your cost control becomes very important. How do you now implement that in the multifamily and vacation rental business through expenses or capex, right? Or even buying a property, what basis you buy, how do you analyze, is that the right basis or not? All those things are important, and having the mindset helps you. And having efficiency and making sure operationally you're doing things right. And it has to be a culture, right? It's not like just me doing it. It has to be everybody involved believing that, and then make sure every decisions we make are based on those guiding principles.
Yeah, awesome. Thank you for sharing that. So you touched like you focus on macro and microeconomics. So you guys like did deals multiple states in South Carolina, Georgia, Florida. When you go for that, so what kind of macro and micro parameters you guys look? And when you are underwriting, so what are the key assumptions you make?
This is a great question and a very involved question as well. Again, as I said earlier, Amazon and Capital One, these two great companies, one thing they've done is they've said decisions we're going to make will be data driven and will backed by customer experience, what customer need. And I drank the Kool-Aid. I totally believe in that. So I think coming from there, when I started looking at multifamily or vacation rental, there are a lot of cities across states that are great location to purchase real estate, right? But how do you evaluate they are the right place? Like last year, I spent 3 or 4 weeks traveling Georgia, South Carolina, North Carolina, Florida cities. I will go literally Monday, come back Friday, and rent a car from Atlanta Hartford Airport and drive for 1,500 miles for next 7 days and stop at different cities and look at like different properties that we are interested in. But the idea was also to get a feel of the area, right? And the and before this trip, what I would do with my analyst is we'll do a analysis. We'll look at two things: macro, which is city. How is this city doing, and the state. So we have come up with 25 data points that we collect for every city. Like some of them are pretty obvious. What is the income growth? What is the population growth? What is the diversity of population there? How is med ed fed supporting economy? What are the private firms over there? So we have 25 kind of factors. So we will say all these factors, and we have benchmarks. We have done it by state, like where does the city stands in terms of those benchmarks. And I think this is where technology and data comes in, where I literally have come up with the red, orange, and green kind of buttons for each of them. That visually I can easily see, okay, majority of them are green or yellow or red to give me understanding of where this city is in terms of compared to all kind of a country. And there's a lot of good sites, BLS, census.gov, right? Literally, we don't do manually. This is where technology comes in, created API integration and also parsing those sites to download stuff, uploading on our databases. I can literally go any city on these states. You tell me, I can tell you tomorrow 25 data points, right? So that means if I have to go to a new city, I just go to my report, I look at the city, I see what the macro is. But initially, we have to come up with what data points we should look at and why we should look at those ones. So one is that. And then if the city makes sense for us, like when I said last year, I went to a lot of these long trips, I would literally select the cities I like. I want to go to city. Now I want to get a feel of it. Hey, in Savannah, like when I went there last year, looked at if you go to our west, a lot of good cities which we were interested. We look at some properties which were great properties as well. But now I have my data point back of my head, and I look at the city, and yeah, like, does it map, right? Does it make sense? I'll drive rush hour. I mean, obviously last year rush hour crazy, but like, you go to malls, you go to the apartment complex, you stay there, you look at things around it. Does it make sense what data is telling us? So that's on the macro side. The micro or the underwriting piece is very involved. And that's where I think anybody in this business who have done it or anybody new joining it has to know you have to really get into line by line item. You get T12s and your rent rolls from the seller, but you cannot just take it at face value. You have to literally analyze and see, does it make sense, right? For example, rent roll. Again, this is technology comes into piece where we build an application. I can upload my any rent roll, and within seconds, it gives me an insight. So what used to happen initially, you get a rent roll, you're creating pivot table, Excel file, you're trying to understand how many people moved in last month and month before, right? What was the rent they paid? What is the other income they've generated? But doing one at a time, it's very time consuming. And when we are underwriting 100 plus in a year, you want to look at things quickly because time is money. So we create the application where I can upload and rent roll, and within seconds, I can go and look at my reports. I can tell you how many obviously are occupied, which is easy to do, occupied or not occupied. Then I can give you a distribution of how people have moved into this building in the last 12 months. Is it a lot of people moved in 10 months ago, but last 3 months have been lower? And I can tell you the distribution of what they're paying by unit type. One bedroom, is it consistent? Has it gone down? If it gone down initially, is the seller giving some rebates to bring people in to get the occupancy up? Those are insights you want to know, because then you come with a question when you go back to broker or seller and say, why this is happening? Why are you giving more rebates now versus you gave 6 months ago? Because that tells you like, is there was an occupancy issue that he's trying to overcome, right? So that like that rent roll analysis became important. And in underwriting, your leverage is important, right? Your relationship with lenders, what you can get, 75 LTV, 80, 70, nowadays sometimes 65 when the interest rates were higher, and your investors, like what they are looking for. So we have 2 or 3 classes. Like class A would be we give a 10% so coupon 8 to 10% based on the property and the area. But then class B we give 7% coupon with at least 15 to 20% kind of IRR for the project. Now all that can make sense only if I'm producing cash flow from the property every year. So when we're doing underwriting, we're looking at where the current rents are. Then we have to look at, hey, where can I take this rent to by implementing a business plan? That will depend upon what the class of the property is, class A, B, or class C. Right? If it's a class A property, newer build, right, my business plan would be mostly around efficient managing it because may not put a lot of capex in improving it because it's a newer property, but then I have to run it the right way, how marketing looks like, what's my prospecting looks like, and what are the other class A properties close by? How are they doing it? How far, what's my gap between my rent and their gap, right? But if it's class B, class C, where I need to put some capex, then what is my timeline looks like, a year, 2 year, based on number of units, and what kind of capex budget I'm going to allocate. Again, that depends upon business plan. If I'm at $1,000 a unit rent, and I want to bring it up 20% or whatever in the next 5 years. Every year I want to do X percent. Is that even sustainable? So what we also do is we look at rent analysis of comparables. The brokers send you these comparables for sure, but again, you cannot take it with face value. My analyst literally goes and we look at a true comparable to our property. If I'm buying a class B, it was built in 1990. I want to look at class B 1990 plus minus few years in that area with similar amenities. I don't want to compare my property without swimming pool to a property with swimming pool, right? So having the comparable is important, and then understanding the gap between what we are paying right now and what they are paying and how the area growth is happening. You use all those factors in your projection where the rent growth can be. In underwriting, like one of the key factors everybody uses your revenue growth, rent growth year over year. Baseline is 3%, but you cannot take 3% for every city. Like I'll give you same with the Savannah example. Last year, if you use 3% for Savannah by April, May of last year, you are undercutting yourself. Savannah was growing more than that. But if I go to Columbus, Georgia, I cannot take more than 3%, right? So understanding those factors are important. How you're getting the data is important. Accuracy is important. We take all those things into consideration into our underwriting as well to really project, does it make sense for us? And it has to make sense for us before we go to an investor and say, hey, this is a good project for us to invest in. And so I would say those are the macro and micro kind of things we look into to project if it's the right investment or not.
Yeah, awesome. Thank you very much for a detailed explanation. So when you look at like rent roll or T12, and when you're are like last 6 months lease trends or whatever, 9 months, 3 months. So what are the red flags when analyzing these rent rolls or T12s?
Like one example I gave you on the rent roll was what is the rent that was unit was put up on. If you see a drop, let's say a seller had a one by one rented at $900 a few months ago, and now it's at 800 and or 850. The question is why it's at 850. One is, yeah, the market is being depressed, and we have other data of the area as well to see it. But if it is not matching market, you want to understand why it's happening, because is seller giving some discounts right now to make sure the occupancy stays high for the selling process, but you cannot sustain that because you cannot give those discounts long term, right? Another thing that you want to look at is like from other income perspective, what are the things that what's involved? Like the pet rent can be there, washer dryer rent can be there, right? There are other line items that can be there. Sometimes sellers may not include rubs, that they're not charging rubs to the tenants. So look for this opportunity. If the apartment building has washer dryer hookups, but they don't give washer dryer as a rents, you see that those opportunities. Can I rent them to tenants and charge them 20, 30, 40, 50 bucks, depending on the area, that can help me increase my other income, right? And then on the rental side, I think you also want to be very cognizant of the true people who are living in there. You want to make sure that there are no somebody's brother or sister living there just to show their occupancy above 90 for the time being. So when they join, the history of those people are important. So we look at, obviously, rent roll analysis has to be done in a very, there's a science part of it, but there's an art part of it, which is your intuition and your understanding of the area, how it's going. If you give me a property where overall, let's say in the market, it's 80% occupied, and I see a property which is 92% occupied, I will stop and think one time, what's going on here? Why it's more than 90 if the area is 80, right? Then I'm going to rent roll line by line item to see, does this make sense? Is every person, I look at the name. Sometimes I search that name also on Google just to see if it's a real person or not, right? So you go that much deeper to understand, hey, does this, what they are saying right now is true? Because your rent roll drives what the revenue they're generating. If the rent roll is not right, then your revenue is not right, then your property valuation is not right. So you have to go line by line item to look at it. And similarly on the T12 expenses as well, right? Like you got to be able to, like a simple example of payroll. Everybody knows like there's a range of per unit payroll it should be. But by city, it changes. A person I'm going to hire property manager, leasing manager, or tech in Charlotte or in Atlanta will be different if I go to smaller cities. So what is that range looks like? Sometimes seller is managing themselves, and they may have their own somebody in the house working on it, and their payroll could be very low. But you cannot use that when you're running a business. You say you're going to hire somebody, then you have to increase the payroll in your underwriting. So I think those are factors you look at, and looking at underwriting a line item is very important. And having your benchmarks, what you think it will be based on your experience or the area is important. And then you want to keep some sort of sensitive analysis in there. Yeah, it can go up and down. Inflation come tomorrow, and your R&M can go up, right? Lumber prices were higher 2 years ago, and now salaries are higher, right? So those things you have to take into consideration. But in the end, your returns to investor has to make sense based on the sensitive analysis as well.
Yeah, thank you. And yeah, coming back to operations, you guys using technology to leverage operations, streamlining processes and building systems and process dashboards are cutting expenses, right? Would you share one or two examples where you leverage technology to increase ROI or cutting expenses or anything? No?
Yeah, no, very close to my heart and near dear topic, because across my properties, one thing that I look at are the expenses. So I think again, taking my learnings from my experience from Amazon and Capital One, like what are the process you put in place to make sure there's a monitoring happening across all these line items. So one thing I've done back in those companies is I was part of a lot of stand-ups, right? You meet on a daily, weekly basis. So over here, I have tech stand up every day. I have marketing stand up 3 times a week. and I have an expense management call once a week across my properties with my area manager. You mentioned technology part in the expense. So when we started it, obviously you look in Excel files. Okay, here's my T12 and revenue, and you can download from tools like Yardi. But Yardi tools doesn't give you insight. It just gives you data. And it's not a easy way to look at the data. You can download it and you can create pivots, but if you have to drill deep, you have to create some kind of pivot tables or your own analysis. So again, leveraging our tech background, we said, you know what, this can be solved by technology. Everybody has done it. Like at Amazon Capital One, we look at reports on daily basis, real-time basis that's happening across different business units. So I created an application over here where I look at Yardi. They have an API, but API is very expensive. I'm not going to invest in that. But there are other ways to do it. You can literally schedule a nightly report that comes on an email box. We look at the email box at 1 a.m., download the file into our cloud system, and we then save that data in our database. And then I have an application that shows me expenses and my revenue and my P&L across all properties. But what we have done over here is that's not okay a wow thing because you can look at in Yardi, but the insights and what you do with that is important. I can tell you we have come up with again red, green, and yellow thing to understand month over month how our expenses are going, and also highlight any part of the expenses that are more than the average of the past 6 or 12 months. So we have come up with our metrics that we want to look at. And then we've come with benchmarks. Like I'll give you a very good example. When we start doing this thing, I looked at my electric vacant, for example. It's a very small thing, but it is an example which I share with a lot of people in the company. I started looking at it expense vacant. It was $120, $150 a month. So somebody left the apartment and it's going through the unit upgrade and prospecting. So for a month it's there. And I'm like, why we're paying $150? I was actually in the property one time when I went in the apartment when it was like 70 degrees outside and it was 62 inside. I'm like, why is the AC running, right? So then we came back and we talked to property and said, this needs to be controlled. Then we came a process of if somebody leaves a unit, that a property manager they have to go there, look at all the lights, AC, what temperature needs to be, and make sure lights are off, AC the right temperature, and then monitor it. Because what happens if some vendor came in to do some work and they left it and they put the AC down while working and they left and the AC is still running at 62. So like having that process and check mark as well. And that was like coming process to make sure proactively be able to manage it. Reactively, we look at monthly our electric bill and we say, I have once a month, my analyst look at it and in my application, then he can go highlight if electric bill was high. I can also tell you across any of my building if electricity was high and water was high. So if that happens on the electric vacant, then I can bring it up in weekly calls. Another thing is that I come up with a benchmark. It has to be less than $75, your electric vacant. And last week, literally Thursdays and meetings for one of the property we looked at it, highest was $50, right? So if I join all these, if you had 90% occupancy, right, and your 10% vacant units across the year and across the properties, we probably saved, I would estimate between $6,000 and $8,000. Not a huge amount, but that's a level of using technology, data, supervision, and this monitoring that helps you control your expenses. I'll be happy to get $6,000 and throw in marketing to make sure I'm a 95% occupancy, right? So that's the level of the kind of things that we do. And I think on the technology side, we use data and use cloud-based systems to come with application that helps us make decision quickly. That's the goal over here, right? So
Yeah, awesome. Thank you for elaborating that. So would you share any of your best real estate investing experience so far?
like the two of them comes to mind. One is a vacation rental one. I think in vacation rental, a little bit different than multifamily apartment. In vacation rental, the benefit is the cash flow is in day one. You are able to rent the apartments, rent your houses or cabins right away. And again, if you pick a right place and you are able to find the right cabin that is desirable to the people who are coming there, you are able to generate cash flow for investors on day one. So we are right now working on a project in Smoky Mountain, Tennessee, where we're purchasing 19 luxury vacation rental houses. And again, there are a lot of cabins there where you can get the cabins $200, $300, $400 a night as well. But the quality of those cabins are, I would not say are luxury or premium. I take this approach like best way to explain is we are trying to go with the Apple model. We want to bring a good product, a luxury product and we want to sell them to people who are looking for great experience while coming to Smoky Mountain. Smoky Mountain gets 14 million visitors a year, is one of the highest visited national park in the country. And with the growth of cities like Atlanta, Charlotte, and Nashville close to it, right, a lot of people over there have disposable income and they're looking for places where they can have great experiences. And this is the whole kind of business behind Airbnb or this industry is what experience you can provide. So this project, we're purchasing this 19 place in a newly built community. They're new construction houses. We're literally getting it January, February, March, April. And the community is very different. That's what we love about it. So the developer is actually building a water park in the community itself. And that's such a big differentiator. You have an infinity pool, you have lazy river, you got splash pad, you got a hot sauna, there's outdoor theater, there's a pickleball court. Everybody loves the pickleball nowadays, right? And so he's building entertainment in the community where when you come and live in our cabin, which is 5 bedroom, 6 bedroom, and 8 bedroom, you get that within the price. Like in Smoky Mountain, there are water parks. If you go there, you pay $50 or $40 a day per person. If you have 15 people coming in, you already put in about $600 to $800 over there. But we live with if you get our cabin, you get a lot of those things in the price of the cabin. So I like this project a lot. I think this
It's a
project
5 or 6 offering, right?
it's a 5 or 6 offering, yeah. So
Yeah.
it's open right now on westwacapital.com. In the homepage, you can see a link that will take you to the deals page as well. And it will tell you everything about the area, why we picked the area. Again, we did our macro analysis. As I said, 18% growth in visitors in the past 8, 9 years. COVID actually helped this area a lot, even though COVID was not good for a lot of people. I think from a Smoky Mountain vacation perspective, it helped open this area to a lot of new people. So now 14 million people come over there every year, right? And I think, as I said, the growth of those cities, people with disposable income, they want to come there and have experience as well. And Dolly Parton, right? Dolly Parton has Dollywood there. Everybody loves Dolly Parton, and people go there, enjoy Dollywood as well, which is about 4 or 5 miles from our cabins. So the idea over here is to get the cabin. We'll do property management ourselves. We have experience to do it ourselves. We have functional areas across prospecting, marketing, and property management that we can apply. And the goal is to give at least 15 to 16% IRR to our Class B investors. We have a Class A group as well, 10% coupon right away, and we pay quarterly. And in this business, the upside, you cannot count on what it would be because any event can trigger a rate very high. So Dolly Parton had a birthday, like I think two couple of weekends ago. And if she's there, people want to go there. And suddenly your prices goes up. And this area, I think the Tennessee tourism has done a phenomenal job. What they've done is they have come up with these events, like they have Jeep Takeover Week, or they have Muscle Car Week, or they have your Ford Truck Week. What they do is over there for the whole week, like they will bring in like Jeeps or people will bring their muscle car, and I loved that. I went there last year. So there's a Parkway Road in Pigeon Forge, which is same as like Vegas Strip, and right next to both sides there are restaurants and activities. So this muscle car comes and they line up right next to the Parkway, and the 4 mile of Parkway when the week starts, people drive like a literally half a mile kind of speed. Let's say it takes half an hour to go 3 miles, but they want to see the muscle car right next to each other, right? Or the parkway. And at the end of the week, people can buy those cars as well. Some people are selling. But the idea is that you have that, but what you do is you create a buzz and you bring people into the Smoky Mountain, and then those people needs to place to stay. They need to go restaurant. They need to have activities and fun, right? So overall, we like the macro play over here. We like the product a lot. These are luxury 5 bedroom, 6 bedroom, and 8 bedroom cabins. We like the community a lot. It is one of a kind community with water park in it. It's close to all amenities. And obviously we have closed for 2 houses. We are closing 2 more this week, and the rest of them end of the Feb and March. So obviously we are right now open, and we are working with investors to raise money. The 5 or 6 C investment, yeah.
Sure. Thank you for sharing that. So would you also share any challenging experience so far?
Challenging. Look, every day is a challenge, right? CapEx. I remember when one of the property we started, this was back in 2020 when we purchased one in Georgia. It had 133 units, 52 units were down to the stud. So we got a good basis on that. But the business plan was to rebuild those 52 back and bring them online and increase the NOI, right? We are working with GC, and then the COVID happened and lumber prices went up. One of the challenges is how do you manage your CapEx budget? What do you do when you were projecting 10 to 12 grand a unit, and now lumber price is higher, now you cannot do it until below 12 grand. So I think one of the challenge over there was managing expectation, a timeline, and also the scope of the work. Yeah, if you want to stay within our budget, then what are the other things that we need to cut or we need to think differently, right? Or we need to wait and elongate our business plan a little bit longer so that you can stay within your budget. So I think the CapEx side, those challenges are always there, making sure it's done on time. And again, one thing that I did in the project was this industry, so tech is not as prevalent or the processes, but that's what my background is. So I lean on them. So one thing I did was with my GC, I said every Friday, we're going to have a stand-up meeting on this thing. And I literally got a subscription of Monday.com and I put every unit and every work that's happening over there in there. And he has access to it. I'm like, okay, we're going to update it on Friday, review line by line item, and during the week, we're going to execute it and we're going to stay on top of it. That helped a lot for us to stay on time. Actually, the project was for 2 years. We finished in 18 months. The whole CapEx where we brought 52 units live and rented as well. So I think this is an example like where there are challenges, but how do you deal with them is important, and you lean on your experiences and what you know. And the other challenges on the expense side, as simple as your R&M, right? Your R&M, you got to be very thoughtful of, and your below the line CapEx, like where you're spending, why you're spending. We recently spent about $20,000 in flooring in one of our our building. And one of the question is, okay, now for those $20,000, are we able to get returns for from a rent perspective, right? Those we did have the discussion before, and we said, okay, we should do it. Now that we have finished the work, now the question is, are we able to get the rent that we projected? Now the macro could be different, which can suppress those rent a little bit. Now you have to say, okay, you have spent the money, and if you're not able to see the jump right away, then what else you can do now to increase your rent, right? So I think, look, you come with your projections, your plans. Some of them work great. Some of them, because of things not in your hand, it may not work that way. Then you have to come up with a different way to tackle. But I would say from challenges perspective is a daily dogfight, right? Marketing, prospecting. I mean, prospecting is a great example. I'll give you an example over there. I meet 3 times a week with my prospecting team across my properties. And I literally go to our CRM tool and say, okay, how many prospects came in? What was our communication? And I just had a discussion 2 weeks ago with my team that, hey, usually what happens when you talk to a lot of people, you create these templates that you can share while responding to people. But then you lose a sense of personal touch over there, right? And I think, yes, we should use template, but we also need to keep the personal touch because nobody wants to talk to a robot, right? They want to talk to people. They want to feel that their issues have been handled or what they're looking for is done the right way. So as simple as, hey, it's a new year thing. Make sure you talk to people, tell them Happy New Year, make sure you end a conversation, hope you have a great year. And during the year, all through the time, there are things that comes up, like 4th of July. Tell them, hey, make sure you have a great 4th of July. But there's a small thing that matters a lot because somebody who's looking for a place may have a problem. And at the time, being very transactional sometimes doesn't feel right. You want to bring that empathy piece as well and that conversational piece when talking to people. So challenges, this is one challenge which I tell my prospecting team all the time. And also what you say is important and how quickly you say is important. If somebody's calling you, make sure you pick up the phone. If you miss a phone call, you lost opportunity, right? When you call them back, they may be busy and then they may not be on the phone. So these are things that, again, you need to bring it up forward, put in your process, then monitor it, and then make sure everybody follows it. And again, going through the philosophy of what you want to do across your enterprise is important, and making sure everybody believes in it and has bought in is important. Again, does it happen at the time? No. That's why you need monitoring, right? That's why I have my 3 times a week stand up with my prospecting team just to go over these points. Sometimes I say one thing 100 times, I'm sure they're sick of me saying that. I'm sure, right? But I know if I don't do it, I'm not doing the right job for my investors and for myself to get things right. If I see there's an issue and I don't speak, I think I'm not doing the right job from an owner perspective. And I want to make sure everybody understand why I'm doing that and come with a process where everybody agrees. If they agree, then I move forward from there.
Yeah, awesome. Thank you. So what's your take on current real estate space from macroeconomic perspective?
I would say real estate, depending on asset class, it varies a lot. Like multifamily apartment, you need to make sure what we are seeing, the price of the property is important. Prices were very high 2-3 years ago with the interest rate being almost zero. And now the interest rates are high. We have to see somebody who's selling the property that it makes sense from a cap rate and price perspective. And I think those things have not still come down enough on some of the areas where the underwriting would make sense. There are people who may be offering high returns, but then you have to look into the underwriting and understand why is that. Maybe they have a great lending option. Maybe their investors are not looking for high returns. But those are the key elements you need to think about investing, because if the projections are incorrect, then you will not get coupons or the returns you're looking for, right? But on the real estate side, like I think asset classes, we like vacation rental a lot. I think with the after COVID, people are traveling, and we have seen right now, if you look at all the stock prices of airlines have gone through the roof in the past few months because they're projecting people will travel, right? And again, with the cabins or beach areas or even other asset classes are seeing a boom right now. Not all of them, but some of them across the real estate. So I would say real estate obviously is here to stay, but into the investing, we are thoughtful of what asset class we want to go in. I think student housing, we were not bullish 3 years ago, but we have seen that come back again in the last 12 months, and we looked at that in some of the cities. Senior housing, again, a great asset class we are interested in. We again looked at that as well. Different business model, what's required in senior housing, right? You have to take care of elderly, you have to have licenses, all those things. It's a more involved process from an operation perspective. And then finally, the land acquisition, again, Texas, there are a lot of states right now which have a lot of business opportunity over there, where if you're able to acquire land and you're able to get all the permits you need, you're able to then sell it to the buyer if they have a different business plan for a good profit. So I think, again, you have to evaluate each asset class by city it's in and the macro of the city and the place. Every asset class, there's a returns that you can have, but that evaluation of macro micro is very important. And as I said, last year, me and a partner, we've done about 100 plus underwriting over the first 2 quarters. And we literally put in bid for 7 of the properties and investment final for 4 of them, right? And when we did underwriting, we had our ceiling number, and we do not go above the ceiling number. It doesn't matter. For us, if a seller ends up asking us more, we just walk away, because I think if it doesn't make sense for us, there's no point of stretching. And we don't believe in a philosophy that then you can apply that in every property that you're going to go buy. But understand that, hey, asset class, where it is, don't go in an area which is depressed or not growing. But if it's an area which is growing in multifamily, sure, you can still make money now as well if your lending and your investor return makes sense.
Yeah, sure. Thank you. So any personal habits that are helping you to be successful?
Personal habit, I think, again, lean on more technology side, like back at Amazon, Capital One, tech is evolving on a daily basis, new technology coming up. So how do you stay on top of it? One thing I've done is I subscribe to a lot of like your podcast, a great one. I listen to it and you do a great job, first of all. It helps like a way for me to learn what's going on in the market, because with the whole day busy with all the work, how can I get news information, what's happening across the market? Places like your podcast is a great place for anybody who is in the real estate multifamily vacation to place to learn about it. Spend 30 minutes and you can get a lot of information from people who are in the business. So I listen to a lot of podcasts. I have my Spotify podcast and where I subscribe. And then I use Alexa a lot, to be honest with you. Alexa is right next to me and she'll start talking. I actually, when I was Capital One, I launched Capital One Skill on Alexa platform. And I led our effort across Cortana platform as well and build our skill. So I know how it works closely. So I use Alexa as my audio video sitting next to me to hear things on a daily basis, enable some skills that I can listen to as an update on an ongoing basis. Like as a technology, how I help, I know how I use it. And other habits, I'm a morning person. I like getting up early, 5 a.m. And I think when I get up, there are a few things that I finish before the day starts in terms of work, like my reports. I go to my dashboard, I look at how things are, and it just helps me rethink, do I need to prioritize something higher or not? And if I need to change some of meetings. So I would say personal habit that helps, because then I can find peace, quiet time before kids wake up and they have to go to school to come up with my daily chore and routine as well.
Awesome. Thank you. So any books that impacted you?
Oh, books. I wish I read more books, to be honest with you. But I used to, but now I find it very hard to find time to sit and read. That's why I actually rely more on podcasts where I'm in the car, I can listen. I'm in gym, I can listen, right? Or Alexa can start speaking as well. But in the past, overall, I think I read a lot of in the past like business related books that has helped me think about how to construct a team. When I was in Amazon Capital One, a lot of technology books that helped me understand how to build robust, resilient systems. And I think all those books and knowledge that I have gained is still stay in the back of my mind that helps me when I'm making decisions day-to-day basis to apply them. I think you caught me off guard in terms of the title of the book. I'll definitely maybe send you a message later on that you can share with your folks. But yeah, I think technology-wise, I rely on those more than books right now. I wish I
Yeah,
can spend time reading.
sure, awesome. And how can listeners can connect with you, Deepak?
Great questions. Our website is vestio.com. It's VESTIO capital.com. And over there on the Teams page, then my name is there. But my email address is deepak.kaushik@vestiocapital.com. Feel free to email me, anybody have any question about investments we have done or the new project we're working on. And also we have a contact us page over there. If they contact, my analyst can definitely forward me the email. I'll get that as well. And happy to share my phone number. I don't know if that's easier. My number is 573-424-0068. Give me a call, text me anytime I'm available. WhatsApp, like I'm in all those apps that are there, and happy to take any call and a question that there may be.
Awesome. And thank you very much, Deepak. Thank you.
Absolutely.